Welcome back to another episode of the Crypto Serpent. And due to popular demand on the TikTok channel, you guys have asked, I've offered, and here we go. So we're talking about indicators. Why are indicators important? Why should you use indicators? And what's it like to chart up and to look at these things? Now, the very first thing that I want to say is do not put too many indicators. Please do not overcomplicate something that is meant to be, I wouldn't say straightforward, but don't overcomplicate it. I've seen some charts that look like a rocket ship. It looked like, the most complex thing that you've ever seen. It looks more like a website being coded than a chart. It starts to look like a rainbow. Don't do that. I probably want to start with that. Now, what do I use and how do I use it? Well, first of all, I use a Tiny because it allows me to have multiple exchanges open at the same time. And this is a very basic indicator video. It's not a complex, hardcore. The point of this is to put these on, to check it out, have a feel, have an understanding of what is going on. So between doing your research, news, what are people saying in the market, then your own analysis, you can come up with an idea of what could happen or should happen in the marketplace. So what are the important indicators to put on? By the way, this is free. I'll put a link in the description that you guys can check it out. And for me, I love it. Like it saves me so much time. So there are a couple of things which are really, really important. I'm on the hour chart right now, and I start first with the moving average. So the moving average for me is really, really, really important. So when we go to moving MA, here we go. So we type in MA over there, and we go moving average. And I generally put 3 of them. So I go 1, 2, 3. So you would have seen there that like they're starting to pop up. So I get out of that, and what I do is I go here and I click there, and I go length. So the length I want is 50. The next one, I want 100, and the one after that I want 200. So I want 3 of those, and then you can change the colors on them. So if you want to make them really stand out, you can go style, you can click on there, and like for example, make that one yellow, and make it thicker maybe if you want, just so that it stands out more for you. And then with that one, like for example, let's change this one to like a color that is completely different to the one that you just had. Let's go with that, and let's go opacity 100, and then like I can start to get a better feel and understanding of them. So they are the 3 that I put on, and I want them on there because I think that it's really, really important to have all 3 so I can get a better understanding of the moving average and what is going on. Now when I start to zoom out, I get a much better picture of what is going on and how it can potentially impact the market, what is happening. So we can see them all 3 here, and we can see like, if you zoom in there, like it touched that one perfectly, and then it came back up. So we are on an uptrend. So over here is when we crossed everything over, and right there is when the run started, and we're still on that trajectory. But let's not just go with that one signal. Have multiple signals that can guide you better. It's really, really important. And again, don't overcomplicate it. It will be something that I mention to you all the time. I'm gonna say this all the time. Don't overcomplicate it. Don't overlook at it. Don't overthink. It's really, really important. Now, the RSI is important, and we've got that here right now. And you can see here, this is the oversold and overbought. So at the top is overbought, and at the bottom is oversold. They're very important signals to have. However, don't get confused, because you see right here, when it was like in the overbought, you would have been like, oh, okay, great, this is now time to sell. And then look at that. It just went up, 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 and up. So this is not the only indicator to use, because if you use that and said right here it's time to sell, you would have been wrecked. Like that was literally the time to go. It wasn't the time to sell. So be very, very mindful of what you're using and how you use it, because you could be giving yourself the worst advice if you had gone with just that. But if you look at here, on the blue line, it's time to go. It's not time to, it's showtime. It's time to go up. So be mindful and always have multiple reasons why you're coming up with the assumption that you're coming up with. Ultimately, that is what we're all doing. We are assuming, but we're using these indicators to give us some form of signal. The next one is a MACD. Now, you could, we could sit here and talk about this one for a very, very long time. But essentially, what you're looking for here is you're looking for when these lines touch or cross. So over here, it looks like that soon these two could touch and we could have a similar thing happen than what is happening, that what occurred on the bottom there. So just be mindful of that, because that could be happening. And so what I want and what I'm looking for is I'm looking for the blue and the orange line and when they touch, and what does that mean? So again, I could overcomplicate it for you, but the majority of what you want to see there is how far apart they are. When they are heaps far apart, it's a bull cycle. For example, like, when we look back on the 4th of April, you can see how far away they are here on the 6th of April. They are so far away that it is a bull run. Over here, when they crossed over, you can see the gap between them. That is a sell. Sell, sell, sell. And then over here they touched again, and now we're sort of touching, and now they've spread out again for a sell. So could we see XRP touch 128 USD? Judging by some of these signals, we could really see 128 come back. But again, it's not just about one signal or another signal. It's a combination of multiple signals and what the market is telling you and what is happening out there in the marketplace, that they are very, 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 very important. So we got an RSI, we've got a MACD, we've got 3 moving averages that we've put on at the moment, at the 50, at the 100, and the 200. And then the next one that we're going to put on is it's called Bollinger Bands. So when we put this on, we can actually start to see these kind of things appear, and it starts to pop up. Now, if I go, for example, on the 1 hour chart, you can see when the price gets out of this bubble, that is a great time to place in an order, because the market, it will come back into the bubble. And this is on standard settings at the moment, because again, the purpose of the video is to show you which indicators, and then over time we will go over what each indicator means and how to make the most of it. But when we get out of the bubble, that's a great opportunity to put in for example, in this case over here on the 13th of May, that this would have been a great example to put in a buy order, and then we would have ridden that wave up. And so be mindful of that and keep an eye out. But over here, for example, it broke out of this. And so a sell order would have been a fantastic opportunity here and ride that wave down. So just be mindful of that. And right now we're sitting in in this sort of space. And so what can we tell? Well, on the hourly chart, we've just crossed over into the oversold, but we've still got some room. We've still got plenty of room in the, potential, to touch the oversold. Over here in the MACD, we've got still, I reckon, a bit of room to go before we can begin to rise again. So overall, at 132, 128 to 132 is not out of the question based on these 3 signals. So you got the MACD, you got the RSI, and you got here the Bollinger Bands. All of these signal to me that we could be going down a little bit further before we go up. Now, if we zoom out and go into the daily chart, let's have a look at what that looks like. So again, on the daily chart, it would even look like a 120. Let's have a look. 128 could be the target, and then a high of 169 could be the target there as well. So today's video was about which indicators. Then we will move forward and begin to look at some of the other things as well, and go and dive into each one of them and how they work and how you come up with it. So where to from here? Jump on a Tani, download the free version. Get these on your computer. Don't do it on mobile. It's way too much. Get it on your computer. Start to have a play with these. Start to have a look at them. Maybe change the colors. And then you'll start to get a little bit of a better understanding of what is going on there in the marketplace. Plus the advice that is out there and what everybody's talking about. And so you'll start to paint your own masterpiece rather than going with someone else's. So the purpose of the video was to give you some of the tools that are out there, and now it's your turn to go out there, have a play with them, check them out, find out what could potentially work for you. If you are in the market to start a day trading, absolutely do not start with real money. Start with a demo account. I could not stress that more enough. Start with a demo account, get a good understanding of what you're up to. Be profitable on demo before you jump into the real world. I could not stress that more enough for you. This is very touch and go. It is so volatile. We really want to become good at it before you start to put your own money down. Now, if you did learn something new today, don't forget to hit the like and subscribe button. Hope it was helpful. Let me know in the comments below if you want more of this stuff, and I look forward to see you on the next one.